Okay, cool. Um, Today we're mainly going to be looking at some higher time frame analysis, see what's setting up on the higher time frame, and then if time allows, we will jump to some M15. Let's see. Our DXY finally starting to retrace. Still no expectations for this, largely because of where we are in the time of year we are in now. And we're going into December and January, DXY generally, seasonally, it's a very bullish undertone. And I'm expecting the same thing to continue. So for now, I still believe that the first week of October is retracement season. So it's all about where do we retrace to and why. This is the last time we broke above a high. This is the last time we broke institutional 110. We're looking for the imbalances inside here. So my eyes would be looking at that for potential low of the week scenarios. Maybe I run into 110 and a little bit below inside this consolidation here. And then we could start seeing more higher prices. This fractal here is very similar to the OB model, where we have short-term lows being created here, and then price takes them. So with that in mind, let's first extend this little old imbalance out into the future. And let's keep that there on the radar. So it is 109.50, not far from where we are. DXY can do this in 2 days, or maybe even Friday, since we have NFP. So for the remainder of the week, I'm expecting continued lower prices on this guy. No retracements higher yet, or no push higher yet. I think this is the draw, and that's what I'm going to be looking for going into next week as well. Which means we could be seeing higher prices on NAS. If that's the case, then again, we're in retracement territory. Where's the draw on liquidity? Let's not get into the habit of looking for entry patterns first. Since it's retracement, we're looking for imbalances. The first imbalance I'm seeing is this one right here. That pretty far, roughly about 11.7. So not far from NAS. We've been seeing a lot of days that are above 200 points. So this is an easy 2-day push. Since I'm expecting continued lower prices from DXY, depending on the volume that comes in at equities open each day, we could see price push as far as this candle's opening price. That's what I'd be expecting. I'd be expecting the high of the week to form here at 11.833.7 here. All of these imbalances inside here, all of these large daily wicks. Well, I think I should start by saying all of these large daily wicks around an order block should act as an imbalance. So if that's the case, and we have the order block here, and then all these imbalances inside this, the chances of price trading back to, or let me say the probability of price going back to the bodies inside here increases dramatically. So retracement season, expecting low prices on DXY, and I'm expecting 11.8 high of the week scenarios. AU started pushing yesterday. Same ideas. Where's our imbalance? Or where are our imbalances? Don't forget to mute. So we had yesterday trading up above this imbalance here. Now look at the difference between this here and this imbalance, right? See how we have all these wicks around the imbalances here? And then this one, we don't have all that wick. So whenever that happens, the initial push to the imbalance generally remains unfilled or not completely filled. So like this here, perfectly logical. So what I'll be expecting is we're now engineering liquidity inside an area of imbalance that price is likely to trade. So since my expectation right now is higher DXY, I generally wouldn't want to see this imbalance get completely filled in, but because this retracement has already started and I'm still looking for lower DXY prices, then I'm looking for another large range day from AU. It could consolidate here, but as far as the draw on liquidity is, for me, it would be higher. I like this right here. If you understand ICT's rejection block, then we have a swing low, price comes back, trades below the bodies right here, doesn't need to take the wick based on the understanding. You just need to take the bodies and then immediately rejects it. So this candle here, should be acting as an order block because it essentially is taking the last area of order flow right here. So it's a large candle. Rules says find 50. Not 50. 50 is here. Right here. So I'd be looking for price to trade back down inside here and then push higher. Frank Ramirez, why are you requesting control of my screen? I see absolutely no reason to be requesting control of the screen. But yeah, here we have this candle. I'm looking for this to act as an order block. So right now, I like the fact that we're rejecting the 50% of this candle. So on a lower time frame, we should have overlapping confluences here to push price higher. And again, I'm thinking higher prices here. With sustained weakness on DXY, this could also trade back up into the bodies here, or even all the way up here, because this is Forex pair. Forex pairs generally move a lot. And I think all of this drop was due to some AU news last night, I believe. GJ, I don't even like this pair anymore for obvious reasons. Okay, let's take a look at what's happening here. GJ has been significantly weird recently. If you take a look at this, right here, where is it? When DXR was pushing low or pushing higher here, it was basically depegged from this, in my opinion. Well, not depegged, probably that's not the word I'm looking for, but it looked different, looked very different. We were expecting this guy to be falling, and this guy, getting tongue-tied. The correlation between DXY and GJ for me right now is off, to put it simply. It's off, and I think it's largely due to yen itself and not just DXY, because GBP pairs have been falling like crazy, so this guy going lower makes sense. But if this is pushing, this is implying bullish GBP and weak JPY. I think the JPY weakness is overshadowing the DXY, the GBP weakness, and that's why this is pushing. Which means, well, not which means. So from a seasonal standpoint, JPY pairs or XXX JPY pairs generally have a massive sell-off around about the same time that DXY seasonally gets strength. So December going into January, I'm expecting this to be really, really trading low. So that means if we have a defined range already, it should be trading back into premium to set up that run. So every run higher, I'm not going to be thinking, oh, this is bullish and price is trading higher. I'm thinking, where's our range? Did buy side already get taken? Where are my premium arrays? And that's where price should be respecting. So if you want specific details, then you could always use that framework to dissect the chart, looking for your premium arrays, etc., etc., etc. Gold. This was a given. I was talking to somebody on the weekend at a Forex traders link up here in Jamaica, and don't forget silver. And the idea was that I'm expecting gold to trade back to 1690 minimum. And the reason is for the same thing that we explained earlier. No, it's a different link up. So you see what we explained about the imbalances inside here? The order block, all the wicks around it, we expect deep retracement. On gold, same idea here. So with all these imbalances, or all these wicks, okay, all these imbalances right here are all the wicks right here resting below this huge CB. If your process says that whenever we have an order block surrounded by a whole lot of wicks, price is drawn back to the order block, but the order block itself is just below a huge imbalance, then okay, one sec. There we go. That's fixed. All right, so with all the imbalances and this right here, this suggests that price is likely to trade higher and be pulled above this area here. So going into this week, I was expecting price to trade higher for gold. Now that we have the order block right here, the same fractal that we have where we have the imbalance or these large wicks that we refer to as imbalance resting below an obvious imbalance, we have it right here. We have the order block here. We have a whole lot of imbalances. So extend that out there, and I'd be expecting price to draw all the way up into here for gold to cap the week, and then we start seeing lower prices. That's a whole lot of chat. Okay, cool. So that's what I'm looking at. Only pair I don't like to trade. This fractal looks very similar to gold. So same analysis. Do we have imbalances inside here? First one that jumps out is this volume imbalance right here. We had price trading below it, coming back up, rejecting it right there. So if these are the imbalances below the order block, my mind goes to looking at the bodies right there for the draw. So everything here is suggesting higher prices on this guy, higher prices on this guy. The volume imbalance on EU is all the way up here. I like that it's overlapping with a old high. So opening price of that candle would be the draw for me. So everything is higher. Everything is higher. So now that we have the draw on liquidity, week DXY price, lower time frames should be a little bit easier to trade. All you have to do is try to stay in line, which means this guy lower. So where our imbalance is, first one. Actually, that's not the first one. There's a volume imbalance just above it. Right here. So I'd like to see a day trade through this Even if it doesn't close, it doesn't matter. If we just go down and come back, go down and come back, should be fine, which would give us a consolidating UCAD around about here. And then we start seeing higher prices next week. But for now, I'm thinking deeper retracements. The last aggressive leg was here, right there. So can we get, oh, this is a whole lot of move though. This is a whole lot of move. And then we had a pause right here after price pushed above the high. So we basically have price resting about 50% of the range. Below 50% should be fine, 1.354. Below that should be where the low of the week is formed. We may even get OTE of this range before price starts pushing higher. But this is a daily chart, right? So it might not happen today, but this would be where my draw is. So I'm gonna tag big figure 1.34. And watch that level going forward. This is the only pair right now that absolutely does not make any sense. The price action just does not make any sense. It's obviously trading higher with DXY. And at this time, I mentioned that I think all of this is just stop hunting. And I'm still not convinced that I'm wrong, even though it's still staying above it. There's no clear direction here. Huge displacement, fine, rate hikes, then just chopping between this high and here. We're not seeing any commitment. We're not seeing any bodies going above that. So this price action is unclear, very unclear. JPY doing liquidation. I'm not aware of that, but if that's the case, then that would explain why this is weird and GJ is even weirder. Yeah, this is not something I would trade. It's not worth the risk when there are a lot cleaner pairs.
Yo, Kish, there's some liquidation thing going on with all JPY peers. There is a particular person, I don't remember his name, but there's a lot of manipulation currently going on over in JPY peers.
That makes sense. That makes sense.
Yeah,
But
I will send the link to the articles to you. I think his name is I can't remember right now. I can't even pronounce it, but there is a liquidation thing going on over there right now.
That's cool. Just send the link. I'll take a look at it. I generally don't go outside my basket pairs, so I don't look at things that don't concern me, really. So NAS, some US news, and normal stuff. For Nicholas, I mean, what is there to say right here? I don't remember what our analysis was around this guy, but pretty sure it's in one of these calls that were recorded. But looking at this in hindsight, hey.
We use interest rates too.
For JPY?
Yeah. Because apparently it's like the only one with a negative interest rate.
Yeah, I need to go to global rates. I haven't done that since the start of the month. But yeah, at the start of the month, higher time frame monthly charts and interest rates is always a good thing to look at. I haven't done that as yet, so guilty here. Yeah, this is wow. This is really wow. I'm even a little bit confused because I have no idea what was my thought process, why I had this outlined. And I'm not going to say, oh, look, I had it analyzed and I was right. I don't know. I don't remember because I don't look at silver. I remember why I wanted to see this. And I explained today why that body and not the imbalance. If you caught what I was saying about the imbalances. Tags it perfectly, trades back into discount. This is a higher time frame fractal of the model. And then naturally higher time frames give larger runs of the same setup. And this is just absolutely pretty. Okay, so now we can go to some M15 charts. I had M15 tag right here. Maybe I should look at silver somewhere. All right, so M15, let's start with this guy first. What time is it? 9:26. All right, so previous day's high right here, previous day's low already taken. That's not the low. So what do we have? We have Monday's range. We have Friday here. Deep retracement on Monday, back inside Friday. Liquidity taken here. This would have been our order block candidate. Everything's fine. We trade low. Took liquidity. Shallow retracement. So this is another example of when price does not need to retrace deep. If this is the dealing range, or if this is the range right here, right there, and before price takes this out, it retraces back to premium. Let's tag that. It's a skill for when you're reading price action live, and when you're doing analysis as well. So this is 50% of the range right here. After taking buy side, price dropped to discount. It went back into premium and we stayed there for a while, right? Back to discount, back to premium, which means all the imbalances and internal liquidity were taken here. So when price trades through this low, it's not likely we're going to consolidate this much in premium, take sell side, and then retrace back to premium. It just needs to fill at least 50% of the 50%, if that makes sense. So move your fib on here and then use that to frame where your premium and discount is. Then that would move it to this, and we just need to see price trade above it. So even though I'm explaining this in hindsight, look at what's happening there. Back to premium, sells off, huge displacement. Displacement paired with imbalances, short-term low, short-term high, then this is absolute textbook. And then this is also R3, which means we have a displacement leg, short-term high, price trades up, takes its liquidity. So we know what this candle right here is, trades below it, extend that out, there's your entry, there's your draw, game over. So this guy's going low. The higher time frame daily chart we're looking at just now, I use that to frame where the draw is. So I'm not gonna revisit that here. Just put those levels on, it should be fine. AUM15, I haven't taken a trade yet, but I think AU is retracing inside this day. This was our order, this was our daily order block. That day here. Just remember what we just did on the daily chart. Price respecting 50%. So at 50%, what do we have inside this order block that we could use to key off of for entry? We have a short-term high that was broken here, huge displacement. All right, so my rules are, whenever we have a huge displacement in any direction, but let's say this is bullish, of a huge bullish displacement, we find the candle that starts the displacement or the order block or the origin, whatever you want to call it. Any lows formed above that candle will hold liquidity if retracements do not come back to this candle. So displacement, all these lows here, holding liquidity. So we can see how price swept this internal pool, then pushed, came back down, swept all of this back into the order block, ignore all these large wicks. So watch this right here and in that order block. That would have been your run. So now we have sell side taken, buy side taken, our dealing range has been created right here. So we readjust our fib, 50% of our dealing range is coming in right here. Short-term lows, again, ignoring this wick, or lows would be right here. So I would be looking at this. So now we have another low where price traded below, then rejected, but there's no bodies closing below this. If there's no bodies closing below this, then I start thinking rejection block. So we move this line to the bodies here, and then you reframe what you're looking at. Globalrates.com. Question I got. So the candle that closes below would have been this. So that would be where I'd be stuck in my AU long setups. First target, this high. So looking like maybe a 80-point trade minimum. Should be nice. I don't think there's a lot of risk on this, but rule of thumb, once it's below 20, should be fine. Okay, cool. Nas, love of my life. Okay, what do we have here? We have a whole lot of up days here on Nas. So let me actually clear up this. Period separators on. Sell side here. Canada took sell side. Price trades above it here, comes back. Awesome. No, since price is now trading higher, where's the draw on liquidity? Already framed that from a higher time frame, 11.8, I believe it was. So how do we use that to get involved here? This is what London's high. No, it's not London high. We have one-sided London. This is not a classic buy day profile. I think this is setting up a run to rebalance and then go higher. I don't think this is the move. All of this has been moving way too far for too long without retracing for me to be interested in going long now, because this is synonymous with buying in premium. Price has been moving way too far. There's no clear retracement levels right here. So I'd be more interested in seeing price going lower first. Maybe the PM session can expand higher, but I wouldn't be interested in this. Absolutely not. Let's kind of get an idea of where were the last highs that price was trading through. High here. We're now at that level here. So I wouldn't be interested in this guy unless it retraces below 11.4. Not going to try to find shorts though, but not interested in this. It's too far from my model. It's not worth the risk here. This is just wanting to get in a trade and thinking like, it's the same thing that we tell ourselves not to do. But that's just my plan, right? If your model says your setup is there, by all means, have fun, but I'm not interested in this. And that's why I'm not interested in this. M15 gold would be lows at 2M. Get into gold next. All right, so UCAD. Expecting lower prices. The draw on liquidity is lower. Do we have anything as it relates to entry models forming here? All right, let's look at what we have. We just had UCAD taken buy side. The trading range would be here. So we're in premium of the trading range. This candle here would be my order block candidate. there. But we have this other range right here. So even though this looks pretty, we have a day over here. Let's actually clear up some of this to make it easier. Go back a little. We have a day right here that's taking out this day's high and then price trades below the low. So purge and revert logic comes into mind. Buy side taken, this is sell side. We are trading inside this range. So today's Tuesday. Do we get a Tuesday retracing inside Monday's range and an aggressive Wednesday? I like that idea. So areas to focus on for me would be naturally 50% of the range. And I'd be shifting my focus to retracements here for higher and then lower. Nice and easy. But this guy just taking buy side makes buying here scary. So let's wait. Now, for intermarket analysis, yeah, she's up and, you know, maybe you don't know. So the fact that I want to see this guy go lower first before going higher, and this going lower before going higher are contradicting themselves because they generally go opposite to each other. So I use UCAD to justify what I want to see on this. So if this fractal says UCAD higher than lower, but it's too close to the highs to start pushing now, we could get a run lower. I'm thinking UCAD lower, then higher, then lower. So if this is lower, higher, lower, I'm thinking higher, lower, higher for NAS. It's already going higher. So consolidate, somebody's going to consolidate because this is already gone too far to go higher. So little intermarket analysis. It's already here. Where would it need to trade to retrace? Premium or buy side? But buy side was already taken here. And this is the last highest high after the stop hunt. That would be housing liquidity. So above this and then retrace makes all the sense in the world to me. And then that sets up lower, higher, lower for this guy. Weekly CB on UCAD. I'll take a look at it. Oh, yeah. I think NAS is going higher, right? I think the draw on liquidity for NAS is higher. I just don't see an entry at this time. So do nothing protocol. I think this is drawn lower, but we've not started selling off from premium. So I'm thinking we need to retrace before going higher. So in terms of weekly profile, I'm thinking large range Monday, Tuesday takes Monday's low and then retraces inside. Wednesday has no need to go higher. It just crashes. That's what I'm thinking. And what's this? Gold. Wow. There's so many things here going on gold that I would be iffy. All of this imbalance here looks like we need to rebalance. But gold, when it's pushing one-sided, it rarely does deep retracements. So since we think all of this move higher is already a retracement, the chances of them leaving this imbalance open make sense to me. But again, everything is in an area where it just looks overextended. Like, I'm not comfortable buying this, even though I think the drawn liquidity is higher. And with the drawn liquidity higher and then no clear bearish market structure shift, selling this is guesswork. Absolute guesswork. Yeah, Ben, have a great day as well. So today is going to be a day I don't trade, or at least not now. Yeah, maybe PM session going into lunch. It's not even worth scalping because of the risk. Buying here opens you up to.
I was just about to call cap on that. Every time you say I won't be trading, you trade in the afternoon.
Yeah, in the afternoon is fine. What I'm saying is, unless you're a trade junkie who just wants to be in a trade, this is too far gone to chase buys here. And if you see this candle and you want to sell it, then yeah, you got some cojones. AU, this is where I'm looking at for AU. Sending higher. This was 15 minutes ago and it's still not doing anything. So this is where you learn to trust your rules. You really learn to trust your rules here. And yeah, these kinds of times are exactly when news creates a firework. Whiplash, ICT whiplash type of thing, where we know it's going to go higher, but it wicks beyond where you want to see it, and then it screams against you. Or you can start looking at 3 pushes to the highs or to the lows. And then that as well should be good. So a whole lot of confluence, whole lot of psychology today, not a lot of trading. And I explained why. One day not trading, one day not finding a setup will not hurt anybody. So that's going to take us to the end of today's call, guys. Going into the afternoon session, maybe about lunch. If I see anything clear, I'll mention it in the chat. But for now, this is relaxed territory. This is relax. Maybe study. So yeah, enjoy the rest of your day. And if you're in the Telegram group, we'll talk in the Telegram group. My pleasure, my pleasure. Realistic trading, right? Not just buy and sell, guys. I'm a guru. Sorry, that's a joke.